Hey, this is Awais with OpenTrader, and in this video, we're going to discuss an issue that's costing a lot of traders a lot of missed opportunities. And that issue is how traders deal with losses. Now, as any successful trader knows, trading losses are a part of trading. No one is going to have a 100% win rate, and losses are to be expected. And we can learn from them, right? I mean, every losing trade does give us a bit of information that we can use in the next trade. But we also have to realize that each trade is independent from the others. So in a series of trades, even if you take one, two, three losses in a row, you have to realize that the next trade is an independent event. How you performed on your last trade has no bearing on how this trade will work out, right? So whether you won or lost on the prior trade has absolutely no significance on the trade that's setting up right in front of you right now. And we're going to use Friday, September 14th as an example and kind of see how a couple of trades could have panned out and how this really applies when we're actually trading the market and in practice. So to set the context, uh, we're going to use the E-mini S&P 500 contract, and we can see that ES had been bouncing within a range heading into Thursday, the FOMC statement. And then on the FOMC, we got this breakout move to the upside, and the day session range ended up being 29 points, a very wide range day, and we got that directional break to the upside. Um, Now let's go into Friday. Now this is the overnight session heading into Friday's regular trading hour session, and then this over here is Friday. Let's drill into the 1 minute chart for Friday morning. Okay, here we go. So we can see that ES opened near the upper end of Thursday's range, and we got an open drive to the upside. Now the main idea heading into Friday was that typically the S&P consolidates after it puts in a directional breakout. So we were expecting to buy any pullbacks into support, and on the flip side, we were looking to sell any range extensions to the upside with the expectation that the S&P would consolidate and pull back to Thursday's range. So as ES pushes up to this 62.75 area, that is a level that we had as resistance and a possible short. So let's say you took a stab short over here and it didn't really work out. Let's say you take a small stop out, you get back in up here, and you can see that we get this little pullback down, but it's not reaching our target, which is the top of Thursday's range. So we take one stop out here. Let's say this trade stops out as well. So now we've taken two losses in a row, right? Not feeling very good about that. ES pushes up higher now into 68, and we had 67.5 as another resistance level to sell. And at this point, if you're a new or beginning trader, you might just take a pass on that trade simply because you've taken a couple of losses in a row. You might decide to sit this one out. Like, maybe I'm just not seeing the market right. Maybe the idea is not right. But really, the main reason you're sitting out is because you've taken those two losses, not because your read on the market is incorrect or that the idea of expecting consolidation after a breakout is incorrect. You've researched your charts, you've looked at historical patterns, and you know that this is a high probability trade setup. But the only reason that you're sitting out is because you've taken those two losses. And it's because of not realizing that each trade is independent, and in a series of trades, the prior trade has no impact on the next. So these two losers, for example, if you had taken those the day before, or even a few hours before, you probably wouldn't think twice about selling up here. If it's approaching a place where you expect resistance, where you expect some responsive selling to come in, you'd be confident about that and you would take that trade. There's a negative tick divergence up here, and we're expecting a pullback into Thursday's range, so the reward to risk is very good here. We're risking 2 points, and we're looking to make 7 to 9 points on this trade. but the only reason that you're skipping this trade is because you've taken those losses. So it's very important to treat each trade as an independent event and to understand that how you performed on your last trade has no bearing on this trade, and to really treat it on its own. As long as the context is there, as long as the setup is there, it's in your best interest to take that trade. And as you can see, the trade setup over here worked out very well. ES pulled back to Thursday's range, and this ended up being a 8 to 9 point opportunity that some new traders might have missed simply because they took those early losses in the morning. So it's important to have a risk management plan, and a lot of people use daily loss limits, and that's fine too. But you want to make sure that those parameters don't limit your opportunity, right? That you give yourself enough room and enough shots on a day that it's not just one trade and you're done for the day. That you have enough room within your risk plan to allow you to take that next trade. Now, certain days people are just going to be off. And really that loss limit on the day is more of a circuit breaker on yourself, right? Where you might not be in the right frame of mind, and it's perfectly okay to have that. But as far as taking that next trade setup goes, you want to make sure that you're not letting any prior trades win or lose, right? Because this same concept applies on the winning side as well, right? Sometimes traders take 2, 3, 4 winning trades in a row, and then they become overconfident on that next trade setup, and they don't take an objective view of the market. So really the important part is to have an objective view of the market and to not let your prior performance affect the next trade that's setting up in front of you. So I hope you found this video useful. If you have any feedback, any comments, please post them on the blog. And we'll be doing a lot of these short videos going over some tips on how we view the market and just some general trading tips in the future. And your feedback is really going to help us understand which areas we should focus on and how we should really deliver this information to you. So please share your feedback with us, and we'll see you in the next video.